Let me ask you something. Do the numbers in your city or state not work when it comes to investing in real estate? Where to begin when looking for an out-of-state market to invest in? If you are interested in investing in apartments that are out of state, then you should stay tuned, as I'm going to provide here some actionable steps to evaluate a market. When a broker sends over an offering memorandum, which is a summary of the deal, it usually paints a very rosy picture. Knowing this, it is really up to us to find the truth. It can take hours or even days to underwrite a deal, so before digging too deep, you want to qualify the market first to see if the deal is worth taking a closer look. So as a first step, a quick and dirty method is looking up a city on judgmentalmaps.com. Now the target property is shown here within the blue circle on the map. It sits really close to an area labeled trailer parks. Probably not a good sign, but better than gangs and hookers over here. So it's not a deal breaker yet. Lonely Army wives down here. I'm not sure what that means. Okay, moving on. Another essential first step is to reference a crime heat map. Trulia has one, and as you can see, this is very light blue, which is the lowest, which is great. Not sure why they didn't use red for heat. When I think of blue, I think of ice, but oh well. So the crime is low, which is very positive. So this market and the deal are still alive. Carrying on with the exercise, economic diversity and job growth are two other drivers to keep an eye on. The pie chart for this market is pretty evenly split. The market won't get too affected by any one sector pulling back. So this is another positive. Unfortunately, as illustrated by this chart, job growth is flat. Common sense says where jobs grow, people go. That number on the right is year-over-year growth. You would like it to be 2% and above if possible. Another crucial factor is determining the affordability for the current tenant base. If you are planning on doing a value add and raising the rents, will they be able to afford it? This deal says that after doing the renovations, market rents will be at $947. You want to make sure that the rent is no more than 33% of their income. If you are conservative, you can say that it should be no more than 25% of the tenant's income. So we do 33% affordability first. $947 for the rent divided by 33% equals $2,870 a month. Now you multiply that by 12 months for the year, and that comes out to a salary or income, of $34,440 for the required annual income. For a 25% rent to income ratio, we take the rent, $947 divided by 25%, and that comes to $3,788 a month. Times that by 12 months, and that equals $45,456 in required annual income. So let's split the difference and say we need to be at $40,000 minimum net income. Now drill down to the neighborhood where the subject property is located. Here I'm using city-data.org, which is free to use. At first glance, it looks like the median household income in the area is $112,924, which is plenty to cover the $40K. We need to be pinpoint accurate because income levels change block to block. When I take a closer look, I see that the subject property is actually located in the adjacent area, just south right here. Take a look. You can see that the median income drops to a hair under $30,000, which is well shy of where we need to be. This is probably a deal breaker. The tenant base can only afford a monthly rent of $623.50, well below that $945 they are quoting after the value add. So rent growth appears to be maxed out. This isn't an exact science. I know some investors who do really well in a flat growth market, but they might have other things at work. Maybe they self-manage, or maybe they integrate their own management company. Some people are skilled contractors and can do their own renovations. It is possible to offset some of these less than desirable market metrics. But in this case, with it being an out-of-state investment, the underlying economics aren't strong enough to continue my analysis. So on to the next deal. Now the good news here is I did not spend a day underwriting this specific deal, so this is a great way to sift out the riffraff of your deal flow and solely focus on the deals and markets that meet your criteria. I hope that helped. If you enjoyed this video, hit the like button below, share it with your friends, and definitely be sure to subscribe. I'm Rick with Fortress Federation Investments. Until next time, thanks.